Hi everyone, let's look at the markets real quick because we have a very, very bearish day for gold. Although you will see that we are in the cloud still. Um, so we're at cloud support. That said, some technicals here are rolling over. I don't see the Stoch going too much lower, of course, although it can certainly run lower into the end of April. The Fed speaks at the end of April. That's going to be a very important moment. At this point, gold is pricing in a rate hike. Um, we're not going to get a rate hike. The numbers have been far too weak. We had another weak number with durables, I believe, this morning. If they raised rates here and now, the economy will almost certainly begin to contract even faster. Um, Now, the problem is the stock market is raging. um, I actually checked my account. I still have a small piece left on for the S&P, which I'm very glad about, um, but it's very small, and I'm taking it off shortly. I really don't like what I'm seeing from the economic side, macro side, um, and what we're beginning to see. This is very important. What we're beginning to see is the Fed painting themselves into a corner. They are painted into a corner. Equity prices continue to rise. Bond prices continue to rise. Many worldwide bonds have entered negative yields. I don't know if that's ever coming to the US. Everyone seems to think it is. But a lot of international bonds are now trading for a negative yield out to 7 years. That's a little nuts. That doesn't make any sense. So we have a bond bubble. FXI, China, is almost certainly in a genuine bubble. Um, this is going to be a correction when it does crash and not a crash per se that never heals itself. This is just enthusiasm. Local retail players, let's look at a weekly. Local retail folks have kind of lost their minds here, and they've driven us to new highs. We can go much higher. That said, when we do crash back down, we'll probably hold somewhere between 40 and 43. Um, I don't see us crashing below that, and if we do, again, it's a buying opportunity. Look at a monthly. Asia is it's going to be the place to be for quite some time. Really, the only bullish place in the world. So again, we can go a lot higher here. We're not done, but China is almost certainly going to have a massive correction, probably an overcorrection this year. Um, the S&P is raging. Margin debt is still at record levels. Um, that's not good. Um, the U.S. dollar is getting hit here quite a bit. The currency traders seem to know the most first. If we go look at the USD, and this is not including today's action, the USD is again weak today. Let's go check it out. This does not include today's data, which, as I said, is bearish again. We are at 97.09, I believe, as of this recording. If we lose this area, lose the bottom of these candles, we're going to 94, which I've mentioned in the past. This is a lower high. Everyone is calling this a double top. This is not a double top. The second high here is a lower high. We did not take out this high. And until we did, I said the dollar was in trouble. It was going sideways to down, and that's exactly what we've done. These little rallies have been irritating for those of us that are waiting for a breakdown, but nothing goes straight down. Okay, this didn't go straight up, and it's not going to go straight down. That said, this has been the ride. The ride is over. Okay, this was it. No one saw it. No one announced it. The people that were involved certainly weren't going to tell you their secret. They didn't want everybody involved. Everybody's going to get involved over here. Right, sideways and the last zoom up. Now, we could go sideways and zoom up again, but that remains to be seen. And if we keep breaking down here, we're going to burn many of the bulls. Most people are bullish, and most people are typically wrong. Starting about here, everybody that got dollar bullish and pleaded the dollar as the place to be was right. These were the analysts and the traders starting to see this strong trend and say, hey, this is not done going, hop on board. And then we get the last 6 months and the blow off, and now we're running out of steam. Economic numbers are very weak. If Asia does anything to strengthen, to tighten their economies or their currency, if Europe does anything to strengthen or tighten, the dollar's going to have trouble. I think the dollar's going to have trouble anyway. The Federal Reserve Board doesn't need to tighten. Again, I've said this a million times. Why would they tighten? Why would you tighten? The dollar's super strong. If that's what you're looking for, that's what you're getting. You don't need to tighten. Whatever you're doing is causing all the tightening you need. Energy prices have gotten hit. The only thing left on your to-do list is to talk down the wild stock market. That's about it. Interesting bar here, by the way. Not that this is definitive, but we had an outside reversal and then a follow-through day today. And again, if any more rallies meet with selling, it's flushing down. Gold's having a horrible day. However, the Fed's going to have difficulty raising rates with the weak economic numbers. The dollar is strong, but it's suddenly getting weaker, as many people have worried it would. If the Fed doesn't raise rates, which it almost certainly not, and the dollar continues to weaken, which it very, very well may, we could see energy prices have rebounded tremendously. The dollar continues to weaken and energy continues to strengthen. We can get some nasty inflation. We're certainly seeing it in food. We could get some nasty inflation running into a time when the economy is weakening. I firmly believe that's what's happening. And as we roll up on August and September, because the Fed's not tightening in June, the consensus now is that they tighten in December, I believe. I believe the two strongest months for a consensus is September and December. I do not see the Fed tightening in June. They very well may, and if they do, I think it's going to be too late. I think they're going to talk real tough at the June meeting because, again, they don't need to raise rates. Not with the dollar this strong. In fact, the strong dollar is bad for corporate profits. That could be something that they do want to happen, the dollar to weaken. However, if the dollar continues to get out of control on the weakening side, they will have the problem I think they're going to have, which is a weakening currency and inflation into continually degrading, weakening economic numbers. Then what do? So the gold is pricing in a tightening at this point. Just got oversold. Some stops were taken out here, probably here at 1188, and again overnight at 1185. Not sure why. No one seems to know why. Just no impetus, not enough inflation, not enough whatever reason to keep gold buoyed. Most people don't flood into gold unless they have a reason to. They're panicky. They feel they're going to lose their money, whatever. Things overseas are bad. First of all, JP Morgan has now restricted or somewhat banned putting cash in your safety deposit box. That's bizarre. That's something that people have always done. That's something that the banks have always had no opinion on either way, meaning they essentially supported it. Now they're saying you can't do that. That's strange. Are they trying to flush your money into some other location? Into stocks, into bonds, into... My guess is that the government told them to do that because they have no reason to do that. The government, I know, is certainly concerned with people hoarding their cash. How dare you keep the money that you earned? And they've received word to do that. If they did it on their own, I struggle to know why. Many of these people are customers. I presume because they want people to keep their money in accounts with JP Morgan or another bank and not in a safety deposit box, but that's bizarre behavior. Greece is now in total meltdown mode. The Greek federal government is demanding any cash of any kind be given back to them from their own public agencies. They want education, I don't know, construction, road, sewer, bridge, or whatever public agencies to give their money that they planned on using back to the federal government. I assume because the ECB is squeezing Greece on collateral. The ECB wants more collateral for Greek debt and for cash for banks, and the Greeks need to pony up that money soon, or else they will face a funding crisis that is life-threatening. They will simply be completely out of money. They are spending so much more than they're taking in, which I don't think people realize. This is not a matter of Greece getting a little bridge money to take them through 6 months of uncomfortable economic issues. This is Greece is running their country on 1.5, 1.75 times more money than they're taking in. So when they run out of money is the only question. If you take in $50 a day and you spend $100 a day, that can't last for very long, right? That will eventually just blow up. And when you start borrowing from anyone, including yourself, your burn rate's too high. It doesn't matter what you borrow, you're just buying time because you're burning all the cash that you borrow. You burn that up and then you got to borrow more. You burn that up and you got to more. Your burn rate's the problem, not the loans. Greece has not tackled their burn rate. Meanwhile, what they take in taxes has cratered because people don't believe that the government's going to pay their debts. So they're not paying their taxes, or they're trying to weasel out of paying taxes, or they're hoarding their cash. You certainly don't want to put your money into a Greek bank. The bail-in performed by Cyprus last year means that you could lose everything quite easily. The wealthy have already fled Cyprus Greece, or else removed their money from Greece. So Greece is really on borrowed time here. They're really on borrowed time. They have 3 months max. I would be stunned if they haven't defaulted by September, and they'll probably face some very dire events in June. I have no prediction for May, none whatsoever. I think the Fed's going to mention, oh, by the way, we're not raising rates anytime soon, and we could get some support for gold in May, and I expect June to be another squeeze. July and August are when things are going to get hot. That's when markets really money managers want to protect their gains for the year. They're very wary about a bad September and October. They'd rather buy in October when prices are cheap and trim up their books with good gains going into the Christmas Santa rally. So far this year has been very, very drab. Everyone's very excited about the S&P, but the S&P hasn't moved much. January was right here. This is January. We had a down January. This is a monthly chart. Monthly. This is January. So January started at December and flushed down. So it feels like we've had a great year, but that's only because we started so low. We're only up a few percent. The trouble is the price of the market is so high that even though we had huge candles here, the price of the market is so high, this just equated to a few percent. This is very dangerous. This is luring people the wrong way in terms of sentiment. Market sentiment is very bullish. As well it should be. We've had some great action here on the upside. The sentiment isn't always wrong. It hasn't paid to be short. Very true. Tough to argue with that. That said, the market isn't up 10%. It's not up 15%. It's not up 9%. We're up like 2.5%. All right. So going sideways, having these little flushes going sideways and then squeezing up, and running up to all we're doing is running up to the highs again, and then falling back. Running up to the highs, making a slightly new high, and falling back, or going sideways. So I don't see a whole lot of bullish action. It just looks like traders and investors trying to generate some theta, trying to generate some swings to buy low and sell high. companies that have released good earnings, companies that have had unusual option activity, lots of calls being bought on the stock before earnings. Almost every single one, the stock has popped on earnings, and the option buyers have made out like bandits. I see that all over the place. People are running out of ways to squeeze money out of this market. People playing unusual option activity have done pretty well on the whole. Amazon had a big pop on earnings. Google had a call spread bought. Many other names have had spreads bought or outright calls bought. JCI was a big one. That stock popped huge. A couple of stocks have popped huge on earnings. So it's really turned into a stock picker's market. Everything about the market has been sideways to bland as far as the indices are concerned. The indices are concerned. Gold has struggled this year, but again, it hasn't failed like people said it would. We're not seeing new lows. We are still within support here. We have, I think you're going to see, if we do get a flush down to 1167, 1166, I think you're going to see a lot of buyers step in. Gold hasn't had the impetus to go higher. We are now yellow over gray, or if you will, green over red. And that's over here, up and higher, which tends to suggest that price is oversold and we're going to get a bounce here. As long as this is yellow over gray and curling higher, you got to feel good. We still have to test the 200-day moving average. The 200-day moving average is still falling, but it looks like it's flattening out a little bit to me. That's just me. We've lost the 50-day, but I'm not. But that again has stopped this precipitous fall and is starting to curl. What you want to see as a bull moving forward is the 50 flatten and rise and cross the 200, and the 200 flatten out and also start to rise. That's going to take a little while. I don't foresee any major action, any major rallies, and I think that's why gold is selling off. It's just a lack of stocks are doing well, the metals are not. Go where the action is, right? Chase stocks. That'll eventually turn out badly, but that's what investors do. The lagging span here is below previous price action. That I don't like, but everything else looks all right. The Stoch is making a very long, staggering slope to the downside. The weekly looks better. The weekly Stoch is rolled over, but hasn't crossed and crashed. And the weekly MACD crossed over, but just barely. The monthly is the key here. I'm very concerned about the monthly. What bulls want to see, first of all, the MACD is still rising on the monthly, which is great. When it went down back here, you had several months of pain. That's not happening here. We've had 3 red months, but the MACD is still rising. That's kind of curious to me. I want to see 1188 on a monthly close hold. We haven't generally, most of the price action has been right here. Been real tight. Okay, real tight. We haven't had a huge flush down to the lows here. We have to see 1144 hold, of course. I'd like to see the 1160s hold, of course, but I'd really like to see this entire buy tail hold. Right around 1188, 1190. We're not that far away. It's only 1178. If you go on Twitter, you'll see people really freaking out, screaming about gold's still in a bear market. Don't buy it. How dare you buy it? It's dead meat. It's dead money. Go ahead and short. It's going to new lows. We're all going to be Jimmy Rogers and buy it under 1,000 because that's what the smart money is going to do. No, the smart money's short. Excuse me. I guess you call it the dumb money, but commercials are still short gold. And they're still doing all right, but it's not cratering. And one technical on the monthly, at least, is still rising. So I'm a little leery of getting short here. If you want to short the 1220 resistance, you did great. But I'm really curious about the monthly close. The monthly close, I think, is going to tell you a lot. We have to really lose the 1170s. I don't think we're going to do that. If we do, I think you're going to see buyers step in. Another tell here, 1, the US dollar looks toppy as hell. 2 is the gold miners. The gold miners are not cratering. I got some technicals rolling over here. The MACD hasn't crossed. The Stotch is getting a lot weaker, but it was overbought. But generally speaking, the gold miners, MACD is positive, by the way, still positive. The gold miners have proven to be very strong. I am not long gold in full disclosure. I am long the miners because the miners are showing so much relative strength. We lost conversion, the red line, but we haven't lost baseline. That's rising. Yellow is crossing over gray. That's going to be up and out if it continues. We do have a declining 200-day. We got to go test at some point. But the miners are moving sideways here. There's been some unusual option activity in the miners, and I really like the miners. I bought right about here, over here, so I'm down 30 cents, but I'm not going to sweat it, of course. The lagging span is still above conversion. It's above previous price action. It's above baseline. It's actually on the baseline. It's below the cloud. So we need some more time here. I think we're going to stay in the cloud and kind of work our way sideways a bit, and then eventually work our way up and out. Right around here, late May going into June, we could see gold miners go on a run. I own September calls. I'm not expecting anything just yet. I do think when the rally comes in gold, I firmly believe when the rally comes in gold, it's going to be fast and furious. It's going to be very hard to catch. It's going to move very quickly. And everyone's going to go back and look at this bullish rising wedge and say, well, you know, I've always been long miners because, look, it was making a series of higher lows and higher highs, and so it was a buy. So, of course, I was accumulating. No, that's not what most people are doing. The speculators who are buying GDX, I think, are visionaries. They do see what's going on. We're having a kind of a stealth rally here. It's choppy. It's running out of gas a little bit, but there's nothing bearish about this. We're making higher highs and higher lows. I don't know what volume looks like. Not that hot. Not unusual, by the way. Good buying here. Good buying here. Haven't had any monster sells like this. Did have some nasty selling over here, but buying came in right after. The selling has been generally pretty light. You could call this accumulation 1, 2, 3, maybe 4. Buyers stepping in here. They are really speculating, but I think you're going to see these people proven right. We seem to be grinding up and away here, and I think one day in late May or June, you're just going to see a pop, and gold's going to gain. The miners are going to gain 20% in 2 weeks, and you'll see some call option players really do well. It's going to take a while. I really don't think you're going to see anything happen dramatically in May or even early June. Late June, July, it really could take that long. Looking at the weekly, again, the buying's been decent, but not ragingly great. The selling has really lightened off since it bottomed. This looks like capitulation to me. There's a great article over on investing.com written by Jordan Roy Byrne about the valuation of gold miners and how it is just multi-generationally low. It really only rivals lows going back to the 1930s and 1960s. Newmont released earnings. They had a wonderful earnings announcement. I'm mad at myself for not being long Newmont. I can't believe I didn't spot this. Look at this. This is nearly 7% they jumped. That's with oil. That's with gold prices being lousy. That's with gold prices under 1,200. All right. What happens when gold prices catch fire? What happens when the gold miners start to buy each other? What happens when they start buying their own stock back? So there's a lot of explosive potential in the miners. A lot of explosive potential. The dollar needs to continue down. Internationally, things need to get worse. I'm not rooting for that on an economic level. I don't want to sound like the bad news bears here, but generally speaking, that is going to happen. things are going to continue to deteriorate internationally. The Europeans are actively telling the Greek prime minister and the Greek finance minister, you need to stop acting like children and bring us real hard data showing us how you're going to fix the problem. They're really fed up with Greece. They're fed up with them personally. They're fed up with them politically. They're fed up with them professionally. I think Germany has taken the necessary steps to get rid of Greece from the Eurozone. I think this is going to be a warning to the other European countries like Spain and Italy to sharpen up, to smarten up, and get their books under control. The Europeans, for all their printing, the Europeans still do believe in something like, I don't want to say austerity, more like acting like adults, knowing that the more reckless political bodies in Greece and Spain, who, let's face it, they're acting like communists. They're giving away everything they can. They spend every dime they can. Business creation, business formation is comical. The political bodies there have assumed way too much power and control. They're a joke. And they need to remember that someone here is paying the bills. And those people need to not be bankrupted. Otherwise, unemployment soars and debt burdens soar, and this just gets out of control. So I think Greece is leaving the Eurozone. Germany doesn't care. Germany is prepared. France is prepared. They're not going to be the ones that see their interest rates soar when the shit hits the fan. Excuse my language. It's going to be Spain and Italy and Cyprus and Lithuania and whomever that's going to see problems. And that doesn't really bother Germany a whole lot. They're fed up with Greece. So Greece is not going to let down the gold market. There's going to be a lot more uncertainty. The Fed's going to be painted into a corner. The Fed is going to find it extremely challenging to tighten, especially with a very dovish Yellen, who I think is very pro-Hillary Clinton, by the way. All these people want to get rich on stocks. They're going to drag it out. They're going to keep us liquid. Asia's going to stay liquid. I just don't see us breaking down gold anytime soon. The miners look good. They're under some distribution here. They're under some price weakness here. They got really bullish from 18 to 20. A lot of people came out and screamed, buy the miners. They're oversold. It's going to be a massive rally. And we've had a little shakeout, but there's been no real damage. We haven't even taken out last week's low, which is 1919. And people are screaming like hell. And the miners are showing this kind of strength in the face of some very, very ugly gold price action, right? 1178. Everyone, all the bears are sharpening their claws over in gold land, and the miners are holding up. Silver is worrisome. Silver looks horrible. On a monthly basis, it's okay. It's hanging in there, but it's really gotten poleaxed this month. I'm looking for a stronger monthly close in silver. I think it's oversold. And I think silver's going to follow gold. But if you do buy silver, buy the September calls, because silver's had a nasty reversal from 17. Hasn't taken out the low at 15, and it can swing wildly. You know, we went from 14 here to 18. Now we're back to 15.80. So don't worry. If you're in silver, just remember to keep a tight stop. There's some wild action here. I think you're going to see another wild month up. To the 200-day moving average. We have found support of the bottom of the Bollinger Band here, but this was a nasty little flush down from 16 and change. If you're an option holder, that's really hurt. I lightened up on silver. I think you're going to see it pinch higher with gold at some point, but I think it's going to take a while. In the meantime, do not short the S&P 500. It looks like it's got more to run. Looks like it's going to run up into 2150, 2200, 2250. It's really doing a bone grinder to get there, and it's going to suck in a lot of late stage bulls, and I think all of those people are going to be severely punished. I'm not going to ride too much further up. I'm lightening myself as well as any accounts that I control for others, lightening up into strength, and just watch. I think you're going to see individual names act well. But I think you're going to see a lot of breakdowns begin this summer.